Dear viewers, like every Shrove Tuesday, we're celebrating here on the stock market regardless of current prices. But of course, it's still important to keep our eyes on cryptos and see where things might head, especially since Bitcoin has taken quite a plunge. We've hit the $60,000 mark, you could say. In the next few minutes, I'll chat with Oliver Michel from tokentus about what could be key this week. Glad you made it out on Shrove Tuesday this year. Today's show will be a bit shorter. You weren't with us last year, so it's great we're covering this on Shrove Tuesday now. Did the party vibe take a hit? When Bitcoin dropped to $60,000? If it was even there to begin with?
Yeah, Joanna, there are probably some groups who partied because even though it sounds simple, wherever there's a seller, there's also a buyer. The analysis tools showed that accumulation wallets in particular really soaked up this Bitcoin price drop, so they celebrated. And in that light, we can guess there are types of investors who seek out these price dips and stagnations, liking the chance to stock up on Bitcoin, and now they're just waiting patiently for it to rise again.
We'll dive into these special wallets later. But first, let's check out what's on this week's agenda and also what factors were in play last week. We already saw USA economic data, including labor and inflation numbers. These haven't shifted expectations for a Federal Reserve rate cut, have they?
Yeah, absolutely nothing. You can see here that nothing's changing in the next two meetings. If anything, the stance has firmed up by 10% since last Tuesday. We anticipate some movement in June when Kevin Walsh takes office, then again in September, and now a third is added for next January. I track the upcoming plus. The others within a year, so nothing's changed. We got the labor market data last week. The labor market data we keep an eye on. The week before, we saw the job openings, which were disastrous. The rate stayed about the same. We expected 4.4%, got 4.3%, so it stayed at least on the same level. The non-farm payrolls were definitely eye-catching at first glance. 50,000 new jobs outside agriculture last month. We expected 65,000, but 130 were created. That was fantastic. It's pretty sobering when you realize we've wrapped up several years, including the year 25. Looking back at 25, you have to notice that all those NFP figures were later revised by over 1 million jobs. What's left, I think, are just 100,000 new jobs. Going back to 24 and 23, you'll see the accuracy isn't getting better. If anything, it's getting worse. So to me, it's kind of a joke.
I keep wondering, especially when comparing 2023 to 2025, how can things be so off, and why do we have to retract all those positive headlines now?
Yes, because people tend to forget. At first, there are 130, which sounds pretty good. And if it's revised to 60 next month, fine. Or you also have to dig deeper into the 130, mainly jobs in healthcare. Yeah, and nothing new has been created there. Right now, in the US, there's a gap of 1 million between job vacancies and job seekers. So there's a shortage of 1 million jobs compared to all job seekers, which is at a record high. In other words, the job market is weak, as they say over there. That's the reality. And there's this weird thing. When the job market weakens, inflation goes down, and that's always opposite. I once explained inflation as a lagging indicator. And you can see that here with inflation, we had the CPI. BLS, Bureau of Labor Statistics. It was 2.7 last time, expected 2.5, and it was 2.4. It's declining, showing true inflation. Last week we were at 0.68, now we're back to 0.94, but that's still a really low range. So from that perspective, the correlation is right. But something's got to be done now. And looking at interest rates, it's clear nothing's changing. The Fed, as folks like to say in the US, is way behind the curve again.
We're also expecting the PCE data this week. That means more inflation data for last December is coming out this Friday. We can definitely look into that, but like you said, Paul probably won't do anything either. Still, it's intriguing to see how the US economy evolves. These are the more solid, fixed data we always watch. But of course, we also see more negative indicators that should catch our attention, like what?
Yes, we've always been involved in the housing market. It looks like in the US, buying a house is insanely expensive. It's never been this costly for regular folks to buy a home. So, on one hand, that shows a bit of the struggle. In the US, we also keep noticing stock concentration. The last time we talked about it, we were at record levels even higher than the dot-com bubble burst, and we've bumped that up again. The top 10 stocks in the S&P 500 fund, so the 500, make up 40% of the total capitalization of the S&P 500. That's a first.
So if it pops, the whole index takes a hit.
It all leans on so few big pillars. And if one or two of those crumble, then, just like you said, it doesn't just shake. It all comes crashing down. We've just been through the S&P's reporting season lately, and last week too. And last Thursday, we felt it firsthand, as we'll see soon, when the US indices really took a dive.
You touched on it already. We're in the thick of reporting season. The US is always a bit ahead of us, and not all the data was rosy. We noticed that while there were some highlights, Cisco, for example, saw its stock drop by double digits due to its outlook and figures. Naturally, this impacts the major US indices as well. So, is the chase for new records on hold?
You could almost say yes, and thankfully so. I'll explain why in a sec. In recent weeks, there wasn't a single week without at least one all-time high among our three major US indices. Same story last week. On Tuesday, the Dow hit a new all-time high as shown here. But then came this reporting season and you could see the Dayu on Thursday. And especially the S&P and Nasdaq showed the big red dips dropping significantly. Overall, last week wasn't great for the major US indices. But I think that's actually a good thing. If things had kept going at that pace, we'd hit all-time highs too fast. That would cut short the time our cryptos need to increase in value. That's why I added another point from last week. The question isn't just about the pull of major US indices dragging cryptos along, but also about how much time they can give cryptos to bounce back. The setback we're seeing now on the Nasdaq, which is really important for our cryptos, is a fascinating development. The last value is at 23.8. So ideally, to gain recovery time for our cryptos, I'd like to see the Nasdaq dip a little more this week before making its final upward push, as it aligns with the previous bull run or cycle. It was similar back then. So, the setback in the US indices is good, giving us breathing room and time, and gives hope. But your initial question, it's just been postponed, not cancelled.
We're skipping the Russell and DXY individual charts this time since nothing's changed. So, as you mentioned, it'd be great if Bitcoin and altcoins had more time to catch up. Let's jump right into the daily Bitcoin chart. We noticed a lot of volatility here, revealing both upward and downward potential last week. Where do you see the opportunities moving forward?
Yep, that's the daily chart for Bitcoin. I've cleaned it up a lot over the past few weeks. Here you can see the whole bearish situation when you're looking at it with a bullish perspective like I am. So on October 6th, we were at 126, then dropped all the way down here to 60,000 by the week before last. That's where we are now, at a 52% level. More or less. What did we do? We basically broke through all the support levels. We broke through the 50. SMA weekly, the 100 SMA weekly, and finally the last one, which officially marked the bear market. The high from the last cycle in November, which I explained last week. And it's often the case that the low of the next cycle doesn't drop below the high of the previous one. Or if it does, it's just slightly. You can see it here, that's the case. It's only slightly below that. We're now leveling off, seeing fluctuations like yesterday. We started at 69, then shot up to 1300 for an hour, dropped back to where we started, then went down 300, back again, and now we're right in the thick of it. So right now we're trying to give investors time to position themselves. You talked about the downward trend. Last week I mentioned that. We're currently below 69 and moving sideways. On an interesting note, we're exactly where we were on the presidential election day 2 years ago, November 5th. So, about a year and a half ago, from that angle. It's interesting that after the big surge and drop, nothing's changed. We're back where we started, or Donald Trump is back where he started. As for the downward trend, I think it's going to get exciting down here. It won't just go sideways and then up. Something's going to happen down there. We'll see. I think we need to be patient and watch how things unfold. It might drop to 60 and test it again. But I can imagine a lot of stop-loss orders piling up. Many leverage longs will stack here, especially below 60, where people might say, okay, if it dips below that, I'm out. And at some point, market makers might let it fall, catch it, then push it up. So things might wipe out stop losses and leverage longs in the high 50s, test 60,000. It's all possible downwards it could happen. Those who've held on this far, 60,000, I think they'll calmly consider moving to 58, 57 or 56,000. It could also head straight up, I'm not ruling that out. But down there, we'll have to wait and see how things develop in that range. If it climbs, we outlined the upward path in detail last week. Of course, there needs to be the 150 need to be taken out. Here we've got the 1 and the 0, right? You can see the retracement at 61% from 60,000 to 126, then 70, then 78%. So if you've reached 78% from the low to the last high, there's a strong chance it can keep going. I'd say the relief rally hopefully will continue, potentially reaching 100 or even up to 87, 86, 85. So in this zone, That's 90 to 100 or 112. From here, it could drop back at any moment, which means we'd just have a relief rally, recovering from the low, only to fall again. I'm still secretly hoping it turns into a continuation rally. That means the market sentiment we're about to discuss might give Bitcoin the chance to break through here. We'll see. Don't forget the CME gaps in the middle, which have closed every time in the past 9 months. Hopefully, they'll close upward too. So, we'll find out. If we're getting a relief rally, or ideally, a continuation rally. Last week, Bitcoin ETFs were at about 400 million US dollars. Not remarkably high or low, just an average poor figure for an overall average poor week. So, from that angle, we need to let the situation unfold now, but I believe the price range for its development won't be as shockingly wide as it was before.
You just brought up the timing. A common question we hear both in the comments and on our Crypto Insights Telegram channel is about how long any relief might last, or if a bigger rally will follow. People want to know what kind of timelines they should expect regarding patience and losses. Can you give us a rough idea?
Yes, I can give a rough estimate.
Ausgrenzen.
That's it.
Ja, das heißt, ich hatte
I mentioned in our service that I was expecting it to drop to the high 50s. Then 2 days later, people asked why that hadn't happened yet.
Yes.
Of course, that doesn't happen in just 2 days. You have to wait for the stop-loss orders to be placed, for people to enter the market, reinvest, maybe go long. It takes time for the dust to settle. And for things to calm down, then you attack again. This process can take a few weeks, or it could happen in just a few days. Remember, on this day, the market had tremendous force, and that can repeat. You need to be prepared for that kind of volatility. Such trends don't change overnight, or in just a couple of days. When I say something like that, you should think of a broader time frame.
größeren Zeitfenster ausgehen.
Let's take a look at Bitcoin on a weekly basis. The rule of higher highs and higher lows has been broken. That means, technically speaking, we are in a bear market. We already discussed this last week. You just mentioned the word bullish again. Looking through bullish glasses, do you think there is still a glimmer of hope, even if we are technically in a bear market?
Yes. Yes, that's for sure. I'm still wearing my bullish glasses. I've been saying for months now, what are the bearish signs? What are bullish signs? And I also admitted that technical analysis won the first round with its indicators. So first 50, then 100, MACD on a monthly basis. And what we observed there, on the basis of which we said, oh damn, this could be critical, it's going to fall. But let me say up front that, to me, what is happening here at the moment feels more like a mid-cycle correction. In other words, it's not like a classic bear market, but simply a slightly larger correction within an upward cycle within a bull market. You can stone me for saying this, but that's how it feels. What I have. Let me describe it again briefly. Down here was the low point. This is where we started with our crypto talk. So we've come all the way to the top. This is a logarithmic representation. So it is not linear, which means that the orders of magnitude are slightly distorted. Here we see the movement dropping down through the hundreds. Last week we had said and asked ourselves how deep we are into the bear market. So last week we raised two questions. One was about our position in the bear market, and we found that if you check out the RSI, it's both the largest and the smallest we've ever seen, meaning we're already pretty far down. Which suggests that, answering the second question, the counter movement might be starting soon. And what we also noticed is this is the SMA. 200. You can see here how during the last drop in the last cycle, we went through the 50s and 100s and stopped at the 200 mark. We dipped below for a while, and when we hit 200 again, you could say we were back in the bull market. And here you can see we're testing this at 200 with the RSI, which leads me to answer the first two questions by saying we've hit a pretty low point in a bearish trend. You can call it a bear market for all I care. We've hit the bottom. So now we ask, how does the base form down here? Will there be more testing like we talked about in the daily review? There's a third question now. When do the macros kick in? I'm not ready to give up yet. Like I said, the first round went to technical analysis. Hopefully there'll be a second round. And in that second round, we can't have situations where massive liquidity is pumped into the market, not just in the US, but globally. The dollar's losing value exactly as we predicted for weeks and months. Gold and silver have hit their highs and might be dropping. There's some rotation happening. They're all soft macro-focused indicators that I would describe as, when do they kick in? And when they do, what happens next? I can imagine that we might actually see a mid-cycle correction, and for all I care, the technical analysts can call it a broadening match. And it's on the rise. So I'm not ruling out that possibility now, but it ties a bit into what I said earlier about the US indices. How much time are we working with right now? How long do the US indices give us to develop this structure? So, the third question comes into play. We're entering round 2. We need to see how the bottom forms. We need to see how far the relief rally extends past the counter movement. We've got the range and set the target, and we might see a bit more. Do you think it's likely or possible for Bitcoin to break below the $200 average again? Because then we'd be lower than in the upper 5-digit range. Yeah, we've seen that here too. If we look up here, you can see this red candle. That was like this red candle here. And that was really the range where the RSI dropped below 30, which is heavily oversold. Then that area below 30 formed. Even from here to here, we're looking at the weekly range. That's 2 months. The RSI is inching up. We see a divergence here. Prices are dropping, but the RSI is climbing. This makes it clear that eventually prices will rise too. That's what I've been saying all along. We shouldn't just focus on the formation of the bottom on an hourly basis. We need to watch closely over the next few weeks to see how it shapes up. It's quite possible we'll dip below again, but if we compare it to the last bear market, we've already gone through this phase from here to here. If you've been through that, you can handle the rest. Consider whether to exit here, as the next leg could take us to between $58,000 and $55,000 before it starts rising again. That's my current worst-case scenario. I don't see a complete drop to $30,000 or $40,000 right now because I'm still focused on when factors like liquidity, DXY, and moves by Donald Trump will kick in. Hopefully the Clarity Act will come soon. With all that, there's a lot heading our way that could boost cryptocurrencies. If that takes effect, we'll definitely notice.
If we assume the positive scenario you just mentioned, where the macros kick in and all the supportive signs you just talked about, then that definitely won't pass by the altcoins. What are your expectations for that? If this relief rally happens and maybe even turns into a bigger rally, then altcoins should really beat Bitcoin by a noticeable margin, just like you've been saying lately.
Absolutely. That's exactly right. When Bitcoin kicks off this relief rally and, due to circumstances, shifts into a continuation rally, then I think our altcoins will take advantage and outperform Bitcoin by far. I mean, I've got 2% of my portfolio in Bitcoin. I'm mostly in altcoins, and altcoins definitely have more upside potential than Bitcoin, but there's also more risk.
Yep.
So I'm not just down 52%, but a lot more, as you can work out. So I expect that the altcoins will beat Bitcoin by a good margin in the upcoming phase during this recovery phase. No doubt about it.
I mentioned earlier we don't have separate charts for Russell and DXY, but you've overlaid the Russell in blue over the Ethereum chart. Why?
Yeah, I thought it was pretty interesting to highlight this. We compared the Russell to Bitcoin a while back to show this analogy, and the Russell is in sync even more so. With ETH, you can see it here. The blue line is the Russell, both in weekly view, and the usual chart with the candles is our ETH. You can see it going up, going down. The synchronicity is clear. The synchronicity was lost right here. That's the red line at the end of October. You see it went up here, down here, and up again together. I'm looking at the Russell instead of the Nasdaq because the Russell is the laggard of the four, while the Dow, S&P, and Nasdaq have already smashed their old all-time highs from the last cycle and set new records. The Russell just caught up. That makes the comparison with Ethereum quite fitting. So, at the end of October, you can see the Russell going up, while Ethereum drops. This raises the question, why? Why is this the only thing I thought of? Is it the 10th? Then we had this huge disaster when everything just collapsed.
Yeah.
And the market definitely needs to digest this, no? So from this perspective, I can imagine that what we've seen here is a direct reaction to what happened on the 10th. Something triggered this, where everything dropped so fast and many market players were swept out, losing a lot of money, and basically a lot of what was planted was destroyed and washed away. You have to, if you want to find a silver lining in all this, you can look back. That's always our 1 and our 0. When we draw our retracements, because that's the 21st. The all-time high in the last cycle, and then the low, this is the full bear market that's just finished. You can see here when Ripple hit its last all-time high in the cycle, it lined up almost perfectly with Ethereum. They peaked together. And we saw a similar situation. Both climbed. While Russell took off, Ethereum dipped before catching up and peaking together. That's what I'm hopeful for now. I think the 10th did serious damage. And I wish that when Russell will rise along with the major US indices, 2,800, maybe 3,000 points, as we often note on Ross's daily slide, so Ethereum can catch up, and they can hit the top together like before. And I really think that's possible, because I believe what happened here on the 10th what's been done is, the damage, as I mentioned, is massive. Once that's fixed and trust is restored, then I think Ethereum can catch up at a similar pace as before. We also dipped a bit back. Then. This here, though, is a linear view that shows the scale. So we're pretty close here when we compare Russell. And our cryptos, it makes sense. And you can clearly see we had a real disruption. A genuine break. Just like here. But ultimately the break had been balanced out over time, and then everything flared up again.
Let's check out XRP. You've added something special today, or rather focused on the RSI for XRP. Why is that?
I just wanted to highlight that the RSI is crucial not only for Bitcoin on the weekly chart, but also for our altcoins. You can see that clearly with XRP. We hit a low here, and right here we also had... We briefly dipped below 30. We're not below the 30 line at this point, but we're already quite low compared to Bitcoin. If Bitcoin moves to test 60 again, or even dips a bit below to clear everything out, we should expect the RSI to dip here too, but it won't fall much more compared to the past. So with XRP, we've already hit a relatively low point. I have the 95. US cents, so we're now between $1.40 and $1.50. If Bitcoin as the main cryptocurrency drops, we should expect XRP to fall to $1. That's quite possible. But then we can expect everything to bounce back pretty quickly. And I keep wondering if an average person can time their exits and re-entries right, keep the tax situation in mind, and actually say it was worth getting out and back in.
So are you planning to just stay in there?
That's what I meant.
Yep. We're skipping Bitcoin dominance today, just like last time, since nothing's different.
There was a minor twitch lately. You can see that. When there are green numbers, altcoins get a bit bigger, and when they're red, they're smaller compared to Bitcoin. There's a slight trend toward breaking the 58 or 59% mark, which is where we are now. So I think we're on the verge. Not in the next few hours, but like I said, we need to give it time.
Timing and hitting just the right moment is tricky, but we're trying to consider it in our plan. You haven't changed much. We talked about it briefly beforehand. Still, technically, we're in a bear market. What else have you adjusted in the plan?
Not much at all. Not much has changed since last week. I moved the DAU's all-time high date to the 10th, last Tuesday. Everything else up here stayed the same. We noted small setbacks in the US indexes I mentioned. Gold and silver are having a tough time hitting new highs. They're steady at a level, which could be good for us, as money might flow from there into crypto. I didn't tweak anything for Bitcoin, since I already marked higher lows in red last week. I'm still backing continuation.
I just mentioned it.
As I said, I see more of a mid-cycle correction. And yeah, 140, 150, it's all still unknown. Not much on altcoins right now. We had the bear market in green. Unfortunately, I have to label it green. We'll see how it pans out. I think a lot will be decided in the next few weeks on where it's heading. Yeah?
We've also included the model portfolio mentioned at a viewer's request. It's changed slightly from last week, but significantly from the previous highs, saying goodbye to that 341%, really with some tears, but you still brought it.
Yes, we had a comment about our percentages recently. And yes, we were higher before.
Ja.
Yep. So we had 128% last week, and this week it's 127% tax-free in our model portfolio. I checked our portfolio value on October 6th as
Als der
Proton.
Bitcoin
All-time high.
High hatte und da hätten wir einen Depotstand gehabt von
Total high
341%.
40%.
I would have
Davon
told you.
sind wir
We're
jetzt
now
auch wieder
over 50% away
weit
again.
über 50%.
But that's just how quickly it falls here. Johanna, that's 4 months. In the last 4 months, from 341 to 127, anyone with that in their portfolio, like me, has to live with it and handle it. From that perspective, as quickly as it drops, I can personally vouch it'll bounce back just as fast.
You just mentioned needing to handle a 50% drop in the crypto market. You've been at this for a while, so you've been through these phases. It's totally understandable that newer investors might not have the patience, and it's nerve-wracking when your portfolio is down 50%, especially quickly. If you've seen those high points before, of course it stings. The question is, how do you cope when your portfolio is 50% in the red?
So, as the headline says, we're in a bearish market phase. I still avoid calling it a bear market. It's a bearish phase, and I'm working to stay somewhat optimistic. I've jotted down 3 things that keep me positive. First, like you mentioned, seeing a crypto portfolio down 50% isn't unusual in my experience since 2016. This happens when you're not trading but hodling, trying to optimize a bit. You just have to be ready for it. And when you enter the crypto market, you have to expect this. But as I mentioned, it can also turn around pretty fast. I'm curious to see where we'll be in 4 months. Then we can compare again. I think we'll be much higher up and with different percentages, so it's something you need to be mentally prepared for. A 50% drop is nothing out of the ordinary. It happens.
You mentioned that you still won't use the term bear market. Maybe we can agree to say based on technical analysis. From a technical standpoint, we indeed see the bear market's presence, but you're still looking at other data, the macroeconomic factors. The big question is, when will those come through, or rather, when will they start to matter?
Yes, I noted it down here. In the second point, that what's planned? You've devised a plan and naturally wanted to show results ASAP, to see it take shape fast so you can say it works. But sadly, that's not how it goes. You've got to give things time. The macros we're discussing, like liquidity and the dollar weakening, how the whole tariff issue is playing out now. What it means when, say, the Supreme Court deals with tariffs, that's something often overlooked in recent interviews. If they don't approve them, everything fluctuates. So, we have to give all these macros, which we said would push Bitcoin up, time to work, and also allow the price charts time to evolve. We only have price charts for our cryptos after all. I think we need to stay patient. And if there's one thing we regular folks can't manage, It's time. We'll find out if the 4-year cycle holds, if there's a 5-year one, if there's any cycle at all, if we're seeing a mid-cycle correction, or if we're still in a bear market. We'll see all that if we let things develop. If you can handle it, just give it time. That's always been the way in the crypto market. It's a cliche, but in crypto, with time, you can only win.
You just brought up customs duties. There's still no decision on whether they follow the rules or if everything would need to be repaid. But if that happens, it wouldn't be good for Bitcoin, right? When it comes to debt, there'll be another big crash in the US.
Debt plays no role. It's clear that debt will eventually disrupt everything. It's clear.
Yes.
And that's not something we can stop, not even by removing tariffs. That removes this inflation factor. Tariffs are driving up inflation. That's why we can't cut interest rates. Once the Supreme Court rules against the tariffs, the Fed has no argument left.
To not lower them?
Exactly, not to lower them. So in that sense, it wouldn't be that bad. But we'll see. It's out of our control. We can only react. And if you look at our roadmap, it's from May last year and includes goals we set months earlier at viewers' requests. So, our roadmap is now about 1.5 years, old content-wise. Sure, we're behind schedule. In many areas, we're doing great content-wise. Now we just have to see if we're doing well with Bitcoin and altcoins too.
Oliver, you mentioned accumulation wallets earlier. What's the deal with them? Who's behind them? How are they different from other wallets? And how are people reacting right now?
Yes. But I also mentioned at the start that for every seller, there's a buyer. So if you're thinking prices are dropping and I've sold my coins, remember that someone else was buying them with the reason for doing so at that price. And what current analysis shows is that accumulation wallets have been buying heavily during this downturn, especially around 60,000. These wallets, tracked by analysis tools, mostly gather bitcoins, hold them for long periods, and rarely sell. They're just waiting for a good price. When it comes, they buy more without selling. And they might be 50% down on some bitcoins they hold for years, but they know that with patience, they'll eventually profit massively. Bought, so who was buying? And who was selling? Mainly it was retailers selling. Those with shaky hands. Or investors who lost their nerve. They decided they didn't want anything more to do with it and said, okay, I've been burned. Some might have had to sell too. A lot of Americans had to sell because they needed money for living expenses. And who bought? Well, those are the folks calmly standing on the sidelines saying, I'm in, I'll buy more. I'll barely sell anything unless it's worth it. Like I said before, for them it was a party, definitely. There might be another party. Another party if prices drop below 60, then they'll likely jump back in, waiting for the next party when the prices rise again.
When you're asked as a stock market correspondent in an interview why the DAX went up instead of down today, and you reply with, because there are more buyers than sellers, you usually end up paying for lunch. Just wanted to point that out, Oliver.
I always do.
That was supposed to be a secret. Oliver, that's the end of our Tuesday interview. You held up well, especially with the carnival party here. The music's playing softly in the background. That'll change right after the interview, and we'll see you again by next Tuesday at the latest. To our viewers, we hope the crypto party kicks off again soon, and when it does, you'll hear about it here as always. Thanks for watching.